Hi, welcome to the Market Alert for Tuesday, the 15th of August 2023. So yesterday, big tech bounces, bonds, Bitcoin and black gold struggle as rate hike odds rise. Once more, Nvidia bounces right on cue for a very technical day. Whether that means today or was yesterday, I don't know. But US stocks finished mostly higher amid tech strength, while bond selling persisted. So the markets managed to rally back from the sell-off on Sunday night on the overnight market. Economic news today, 7 a.m. we got the claimant count change from the UK, average earnings as well. German ZEW economic sentiment, and then over to the US for retail sales, Empire State and retail sales as well. We've got the core at 1:30 there as well. So let's have a look at the markets, kick off with the Dow. So as you can see here, the markets are sideways, very sideways. That's been reflected in the intraday activity as well, which has been rather limited. But you can see why when you look at the daily chart. That's why I like to look at the daily charts. Step back, have a look at the bigger picture, and you can see we're going nowhere yesterday or over the last few days. Intraday, though, we moved up sharply there, only 200 points, which is a small day for the Dow. Back down again, and then in the afternoon, what a choppy session this was. So in the pre-market, when they can move the derivatives, i.e. the futures and the options around with no problem at all, as soon as the cash markets open and people start trading in the cash shares, as it were, then the market finds it more of a struggle, because obviously they're trying to balance everything against the futures transactions, and it makes it a lot more difficult. So the futures traders make the money in the morning and mid-morning, and then the cash traders come along, pension funds, investment houses, and then try to buy and sell the cash, and obviously that creates more of a whipsaw market, particularly during a quiet period like now. German DAX, well, this is stuck in a sideways move, isn't it? I haven't seen one like this for a while. And probably could continue as well for another week. But looking at things, hopefully we're going to break to the upside, particularly the fact that the market came back yesterday off the overnight lows of Sunday and never looked back. Just came all the way back. So off that 78.89 level in the Fibonacci retracement there, from there to there. So it looks like it wants to move to the upside there. Hopefully the volatility will pick up today as well. 30-minute, again, you see the market moving higher, probably dragged along by the derivatives in the Dow, back down to the close, and then back up with the Dow in the afternoon, but only for a short time. Already near yesterday's highs, as we can see in the daily chart. We just need to break out of that and move higher. In the 5-minute chart, yesterday, choppy session to the upside. See the market moving there. Then it had a pullback, then another move to the upside, and then just became sideways in different moves, as you can see there, as the market waited for the US to open. Eventually we had a shakeout at 2:30, a lot of volume. The market then turned around and moved back to the upside there, and then overnight, as you can see, if I just fast forward there, you'll see that we've just recently gone to the high of yesterday. The market's not held there, so we've got a bit of a shakeout going on now, having taken out some stops on the overnight, I suspect, of those who wanted to sell at the high, those being activated, and prices moving slightly lower there. In the S&P, also sideways, but also down as well. Down at the 50 EMA, which you can see there. Market attempting to come back. 62% retracement as well. 30-minute chart, again, same as the Dow, up, back. And then the choppy session there sideways during the cash of the S&P as well. In the FTSE 100, also stuck in that sideways range. Would be even more obvious if we didn't have that short breakout that we saw, where the market attempted to break out and failed, but still stuck in a sideways range. Yesterday, choppy session, down, shakeout, and then the market started to move back, nowhere near yesterday's high for the FT 100. Meanwhile, in the US dollar, continuing to move to the upside, stuck at the 200 MA now, so it's going to be interesting to see if it can get through this as we wait for the next, the FOMC meeting is tomorrow night, but it's not an interest rate one. That's going to be September before we see rates moved higher again by the Fed. So it's every 2 months, so we'll just have to wait and see there. Let's have a look at the metals, see how they're faring. So as I said yesterday, down again for silver, managing to bounce back, stuck at the 89. Again, you can expect this to go a lot lower yet before they finish this. We've got the potential of that rate rise that's going to weigh heavy on the markets as the dollar gets pumped to the upside. Again, 1 o'clock, pump and dump by the crooks, the LBMA and the US bankers as well. In gold, we see that also continuing to move lower. No sign of green whatsoever at the moment. 30-minute chart, again, pump and dump. And you can expect more of that at 1:30 today as well, with the release of those retail sales in the US as well. So, they'll continue that for some time yet. And finally, in the gold-silver ratio, this finding a bit of sideways move there at the moment, but still a lot more on the upside, as can be seen by this chart. 90 at least, I would have thought, for this market when you look back. So, we'll see what happens today. Hopefully the markets will just break out of these sideways moves where we've had a lack of volatility and it's been rather boring. So let's hope that is the case today. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.